Hello, my name is Nick Quinn.
And I'm Shane Vernier.
And I'm Connor Woods. We are the market analyst team at howtotrade.com, and together we're going to explain everything you need to know about trading the engulfing candle. So let's get started.
Engulfing candle structures are very popular to use as market structural turning points on a price chart. They can be bullish and bearish, very easy to spot as well. You tend to have one very long candle, one long bodied candle, and then the second candle is a smaller bodied candle that sits within the price range of the body of the first candle. So you need two candles to actually validate that as a structure. They work on both sides of the market, and you would certainly want to use them in conjunction with other things as well, but they're very, very popular and easy to see and use as well. So let's break down exactly what you need to know and how you'd identify them on the price chart. Engulfing candle structures are very, very common on price action charts. You'll see them all over the place, and traders use them as a way of defining whether they should or shouldn't take a particular position. They come in both varieties, the bullish and the bearish variety. But what is absolutely critical in understanding an engulfing candle is the actual setup of the bodies. It's all about the bodies of the candles that really defines it as a structure. So you can see in this example, this is a bullish example, and our momentum is reversing to the upside. What's really, really super important is you see the size of the bearish candle as the market rotates to the downside. As it comes back round, it's that bullish candle, which is the engulfing candle, because the body of this candle here is completely taken over by the size of the move in the body of this bullish candle. That's the important bit. You can forget the wicks. It's all about the body. In this bearish example, is the exact same, except it's the exact opposite. So momentum is moving to the downside. We're rotating down like that. So as the market comes up, that body there needs to be completely engulfed by the bearish candle that follows it. And as long as that close and all of that price action is contained within the body of that next candle, that qualifies it as an engulfing candle setup. But that is the correct way that we would identify it on a price chart.
So then let's have a look at an example on how we can trade this engulfing candle pattern. So they're intuitive, they're user-friendly. What I like about them is you can spot them quite easily, and they occur quite a lot of times. So we can get these quick wins, these quick one-to-one wins out of these engulfing candles. Now then, in this example, we're going to have a look at the bullish and the bearish. So you can see that if we're looking at on this side here, we're looking at the bearish engulfing candle. So you can see we have this small bullish candle here. We have the bearish engulfing that comes after that, which pretty much swallows up that whole candle. And then we get that confirmation candle. And as traders would look to go short at that confirmation candle with a stop loss just above the bearish engulfing, and we can get those quick one-to-ones really nice and easy. We can see that there, one-to-one take profit hit. And if we scoot across in pretty much the same situation, we can see this bullish engulfing candle coming into play and giving us those quick wins, because we've got this small bearish candle here, then we've got the bullish engulfing which comes after it, which swallows up that candle, and then we have that really nice confirmation where we've had that now trend shift to the upside. And you can see that again, if the trader was to go long at the close of this bullish engulfing pattern with a stop loss just below the bullish engulfing candle, again, really nice one-to-one risk reward trading, and you can see that again, our take profits were hit on that regard as well. So that's how we can use the bullish and the bearish engulfing pattern to get those quick wins one-to-one trades.
Okay, let's take a look at a few of the key pros and cons for the engulfing candle pattern. Engulfing patterns are readily identifiable visually, so they're striking and they're easy to spot. Both bullish and bearish engulfing candlestick patterns frequently occur on all Forex pairs on all time frames, so they are never hard to find. Also, engulfing patterns can be an exceedingly profitable way to trade Forex reversals. On the con side of the ledger, engulfing patterns can produce false bearish or bullish reversal signals. Also, on larger time frames, such as a daily, a weekly, or a monthly chart, stop losses may be extensive, as the pattern itself is a guide of where to put the stop loss. And lastly, the engulfing candle pattern often precedes choppy market conditions and consolidation, which can be challenging to trade reversals. Now, let's review some of the key takeaways from the engulfing candle pattern. Number one, engulfing candle patterns are characterized as reversal indicators. Number two, Forex traders use engulfing patterns to trade the reversals of bullish and bearish trends. Number three, confirming engulfing candle patterns with other indicators lends credence not only to the formation, but it gives the trader the confidence to enter the market. And lastly, engulfing patterns aren't 100% accurate. Proper risk management is required when utilizing them strategically. Now, if you want to learn more about the engulfing candle pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you exactly how to fit engulfing candles into your own trading methodology. We'll demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain valuable market experience. Then, once you're ready, feel free to join our How to Trade Funded Trader program.